Hello and welcome to FIS Binary Educational Center. In today's lesson, we are going to be discussing what Bollinger Bands are. Now, some might be wondering, what is a Bollinger Band? Now, a Bollinger Band is a trading indicator that is made up of three bands, that is an exponential, moving average, and two price channels representing the standard deviation of the assets under analysis. Alright, now I am going to illustrate to you what a Bollinger Band looks like and how you can use it in making trading decisions. So give me a minute and join me on my charts. Alright, so here we are on our candlestick chart, and this is what a Bollinger Band looks like, and I'm going to show you how you can get a Bollinger Band on your chart. Now what you do is you go to indicators, as you can see right here, and you go to trend and you choose Bollinger Band. Now the period is, we usually use 20. We leave the shift the same at 0, and the deviations we leave it at 2 and apply to close. Alright, and you can choose any color you want, but I usually prefer black, and then you click on OK. So it draws it on the chart for you. Alright, now this is how you trade with a Bollinger Band. Now you can use a Bollinger Band to best trade a reversal strategy, which implies that now the closer the price of an asset gets to the lower band, it implies that an asset is being oversold, is getting oversold. So if it closes, the price of the asset closes below the band, the lower band, it implies that the asset has been oversold. Therefore, what we're expecting is that the price of the asset needs to rise back up. Alright, now on the other hand, when the price of the asset, alright, gets closer to the upper band, alright, it implies that the asset is being overbought. Alright, and that implies that we're expecting the market to move back down again. Alright, so if it closes outside the body of, if it closes outside the upper band, it implies that the market has been overbought. Therefore, we're expecting it to go back down again. Alright, so with the Bollinger Band strategy, what you do is you wait for the market, for instance, to close outside the body, the market's price or the candlestick to close outside the lower band. Now when it closes outside the lower band, what you do next is you wait for, that's a bearish candlestick is supposed to close outside the lower band, then you wait for a bullish candlestick to form next after the bearish candlestick, and then you take a call trade. Alright, so in this case, as you can see, a bearish candlestick closed below the lower band and it's followed by a bullish candlestick. And when this bullish candlestick closes, immediately you take a call trade. So as you can see, the market move up. Alright, now on the other hand, when the market moved up, you will notice that with this particular candlestick, it's closed outside the upper band, but you wouldn't take your trade because the next candlestick that followed it was not a bearish candlestick, it was also a bullish candlestick, so you didn't take a trade. And this also closed outside the upper band, but you still wouldn't take your trade because the next one that followed it again was a bullish candlestick. Alright, so you wouldn't take your trade. Now this bullish candlestick also closed outside the upper band. Now what happened next was that a bearish candlestick formed next to this bullish candlestick. So once this bearish candlestick closes, you take a put trade, and you can see that you easily will win your trade. Alright, but if you take a put trade, you win your trade, and if you take a call trade right here, you win your trade. So this is how you use a Bollinger Band in making trading decisions. Alright, so let's get back to where we were and let's continue from there. Okay, so I know some of you might be wondering, what is the importance of a Bollinger Band? And a Bollinger Band helps tell an analyst the level of volatility of the markets of an asset. Alright, now if the bands widen, alright, it indicates that the market is very volatile, and it gives an indication as to whether a trader should avoid trading at that particular point in time. And the trader strategy does not favor volatility. Alright, and when the market contracts, it tells an analyst as well that the level of volatility is very low. Right, so depending on the particular level of volatility of the market, it will determine whether an analyst will take a trade based on their strategy or not. All right, now the second one is that it tells an analyst whether an asset has been overbought or oversold. Now, overbought in this situation means that the asset has been over demanded and therefore there has been too much supply of the asset. And since there's too much supply of the asset, given basic economics, it tells you that once there's oversupply than demand, the price of the asset is going to begin to fall. Alright, because the price was high, there was so much supply of that asset, and now the supply has outstripped demand, and therefore the price of the asset is going to fall. So when the asset is being overbought, it indicates that the price of the asset is going to fall. And Bollinger Bands do very well in telling us whether an asset has been overbought, alright? In the case of oversold, it implies that because the price of the asset is very low, suppliers are not willing to supply the assets because of the low price, alright? And given the shortage in supply, it causes demand to outstrip supply. And when demand outstrips supply, it then causes the price of the assets to start rising. So when the asset gets to the oversold point, it implies that demand is beginning to outstrip supply, and we're expecting the prices to rise back up, which will then cause suppliers to want to supply the asset at higher prices. Alright, so this is what it implies. And Bollinger Bands do very well in telling us when an asset has been oversold as well. I hope you learned a lot from today's lesson. It's been a great pleasure taking you guys through the training. I hope you learned a lot from all the training sessions we had. So we'll meet again next time. I will say take care and have a nice day.